Hi, this is Jim Harvey, president of Opus 111 Group, and this is Your Money Week. This week I want to talk about a chart that I recently received explaining the response of the market after a significant downturn in the first quarter of 7 years over the last almost 100 years. And the point is that, the market this year has started out negatively, and it's quite natural to be concerned about that. But here's some statistical proof that in 6 of the 7 years in which the first quarter started negatively, of at least a 10% drop, that the market has responded quite nicely. As you can see, going back from 1928 to 2021, so almost 100 years, there were 7 years in which the market declined at least 10% in the first quarter. In 6 of the 7 cases, the year ended up with a positive return, with an average positive return off that bottom of 40%, which is great. So if you look, for example, here in 1933, the market at the end of Q1 was down 15. The next 3 quarters, it was 70% up off of that bottom, that 15%. 1935 is down 11, and then up 59 off that low point. In 1938, it dropped 19%, and then it responded up 55% off that low point, etc. Only in 2021 did the market actually end a negative after a first quarter of being down at least 10. And most recently, you might remember 2020, that was the year COVID hit. I think it was on March 22nd or something, the market was down 37%, but it then rallied the last few days of the month to close at down 20. And then after that, it increased 45% off those low numbers. So look, I'm not saying that this should absolutely say, well, in the future, don't worry about it when the market goes down. But what I am saying is that in 6 of 7 cases, the 7 worst starts to the year, going back to 1933 in this case, 6 of the 7 ended up in positive territory. Don't forget also the rule of 55, 65, and 75, which are statistical facts about the S&P. The S&P is up 55% of all trading days, 65% of all trading months, and 75% of all trading years. Some people say, well, don't put any money in the stock market. You don't want to gamble like you're going to Vegas. I'm happy to go to Vegas and have those odds in my favor. I think I would be more like the casino and the house as opposed to the people gambling. Just keep it in mind. Is it natural to be upset when the market goes down? Yeah. Is it smart to make panic decisions as a result? No. And I think that's the takeaway on this particular thing. So we encourage you to go to our website at opus111group.com. In particular, go to the Learn page, where you will find this Your Money Week podcast, some podcasts from my partner Mike, radio shows, other information, both written, video, and audio that you can use to maybe sleep more comfortably at night and not worry quite as much. Anyway, this is Jim Harvey, president of Opus 111 Group, and thank you for your time and attention.